It's somewhat similar to that. We have seen a huge rally from those lows back in March, around March 23rd, and it is quite normal in a bear market to see a big fall, then a bit of a retracement. But it's also normal often to have some sort of retest of the low. And so I think it's way too early to say that we're just going to go straight up from here. I think we are going to see some pretty tough economic data globally, in Australia as well, in Asia, over the next few months. There's still these uncertainties about the virus, even though on balance the news has improved. And that suggests to us that we could go through a period of at least consolidation in share markets, if not some sort of pullback. And the risk case, of course, would be a retest of those lows seen back in March. So I think it's a time to wait for better opportunities to buy into the market. Always very hard to time markets at the low. So therefore, a better approach if you are looking to get in is to either wait for pullbacks or to just average in over the next few months.
And you laid out a few possibilities there, but what do you think would be the real trigger to retest the low? Because that's one thing we have to watch here in terms of what investors should be mindful of if it comes to that.
I think there's a bunch of factors there. One could be, that the shutdowns globally are eased, but we see another round of cases, a re-acceleration in the number of new cases globally, and therefore a so-called second wave, necessitating a renewed shutdown in economic activity. So that would probably be the worst case scenario. The other one would be simply just a run of bad economic data, raising concerns about the collateral damage that the shutdowns have caused. Share markets did respond to the news of the shutdowns back in March. They responded very sharply with roughly 35% falls. So a lot of bad news is factored in. But if you get a lot of collateral damage flowing through, companies going bust, etc., on a broad scale, then that obviously could be another threat. The other one, of course, is the one we're hearing a little bit lately, and that is that tensions between the US and China seem to be ramping up. Donald Trump knows full well that the US economy is not doing very well. It's not necessarily his fault that the virus has come along, but historically, presidents don't get re-elected when there's a recession and rising unemployment in the period before the election. So he is at risk here, and he may conclude, well, there's nothing to lose. Let's see what I can do to rally Americans around the flag and pick a fight with China. So that is a risk here that I think investors need to keep an eye on.